So today we're talking about Tesla getting a big boost in delivery expectations from Wall Street. The Cybercab has achieved a regulatory milestone, and Ron Barron once again expressed his deep belief and support for Elon Musk and his companies, including SpaceX. Welcome to Everything Tesla, Elon Musk and SpaceX. This week, deliveries got a big boost in expectations from Wall Street firm Goldman Sachs, who believes the company will report stronger than expected numbers when the second quarter comes to an end in the coming weeks. Now, Goldman Sachs has raised its vehicle delivery forecast for Tesla in the second quarter of 2026, signaling growing confidence in the electric vehicle leader's near-term momentum despite mixed market signals. Analyst Mark Delaney, one of my favorites actually, lifted the bank's Q2 estimate to 420,000 units from a previous 405,000, surpassing the consensus estimate of 400,000. This upward revision stems from a stronger than expected sales data across key regions. However, Europe stands out with projected year-over-year growth of 85 to 90%, driven by robust demand for the Tesla's Model Y and refreshed offerings. Also, China posted high single-digit gains, while markets like South Korea and Australia also contributed positive momentum. And this is why this matters. These gains help offset mid-teens declines in US deliveries through May, where broader EV market headwinds and competition persists. Goldman extended its optimism to the full year, increasing its 2026 delivery projection to 1.73 million vehicles from 1.72 million. However, long-term forecasts remain unchanged, with 1.88 million units expected in 2027 and 1.96 million in 2028. Now, the bank also nudged its 2026 earnings per share estimate higher to $1.35 from $1.30. reflecting anticipated margin benefits from higher volumes and operational efficiencies. We know that Tesla prepares to report official Q2 figures shortly after June 30th. Investors and analysts will closely watch not only headline delivery numbers, but also regional breakdowns, average selling prices, and progress in energy storage deployments, and of course, autonomous technology initiatives. This underscores a broader narrative for Tesla. While legacy auto markets face softening demand and tariff uncertainties, Tesla's global footprint and product pipeline provides resilience. And the Europe surge reflects pent-up demand and policy support for EVs, while China's steady growth highlights Tesla's competitive positioning against local rivals. Tesla still has its work cut out for it, including US price sensitivity and intensifying competition. However, Goldman's revision adds to a series of analyst notes suggesting Q2 could mark a turning point. And as Tesla pushes towards higher production rates at facilities in Fremont, Shanghai, and Berlin, sustained execution will be key to validating these higher forecasts. Tesla's deliveries are becoming a less important metric in the grand scheme of things as AI truly takes precedence in the company's thesis. For Tesla bulls, the Goldman note reinforces faith in the underlying demand trends. For skeptics, the unchanged rating serves as a reminder that delivery beats alone may not immediately resolve valuation debates in a high interest rate environment. Tesla stock reaction will likely hinge on the official numbers and management commentary in the coming weeks. So let's talk about the Tesla Cybercab achievements. The Tesla Cybercab has achieved a significant regulatory milestone. Now, the vehicle has officially secured an EPA certification of conformity for the 2026 Cybercab, classifying it as a battery electric zero-emission vehicle. This certification confirms full compliance with the Federal Clean Air Act emission standards, paving the way for legal sales and operations across the United States. It is important because a certificate of conformity is a critical document issued by the U.S. Environmental Protection Agency (EPA) to vehicle manufacturers. It certifies that a specific class of vehicle meets all applicable federal emissions requirements for the model year. This is a sign that the vehicle is close to being available to the public. Yay! So every vehicle sold in the US must carry this approval, which covers exhaust emissions, evaporative emissions, and refueling standards. For battery electric vehicles like the Cybercab, it verifies zero tailpipe emissions and compliance with the stringent testing protocols. The certificate, issued and effective May 26, 2026, was a part of the EPA's recent bi-weekly upload, detailing the Cybercab's evaporative, refueling, family, and exhaust compliance. It also reveals some other very important information, as the Cybercab's changing depleting range was rated at just over 418 miles. This was for city driving, while the highway range depletion test revealed just over 375 miles of range. This EPA approval is a foundational step for Tesla's autonomous ambitions, while emission certification is standard for any new EV or any other car. It signals that the Cybercab is progressing through the full federal compliance process. Tesla has already equipped prototypes with federal compliance stickers affirming adherence to safety, bumper, and theft prevention standards via self-certification under FMVSS rules. This bypasses the traditional 2,500 vehicle exemption cap that previously constrained low-volume autonomous testing. Also, production of the Cybercab ramped up at the Giga Texas starting in early 2026, with volume targets aiming for hundreds of units per week and long-term ambitions of millions annually. Now, and priced under $30,000 at unveiling, it promises operation cost as low as 20 to 40 cents per mile once scaled. Now, Tesla has routinely flexed it as one of the most efficient vehicles of all time. Regulatory progress extends beyond the EPA. The NHTSA has streamlined approval for control-free vehicles benefiting the Cybercab. Tesla operates supervised and unsupervised robotaxi services in Texas cities like Austin, Dallas, and Houston using its fleet. However, additional state-by-state approvals will be needed for nationwide rollouts. The EPA green light reduces a key barrier, building confidence among regulators, partners, and investors. It underscores Tesla's strategy of designing the Cybercab from the ground up for full compliance rather than retrofitting existing platforms. Of course, challenges remain in scaling unsupervised autonomy, mapping approvals, and public acceptance. But the certification marks tangible momentum towards transforming urban mobility. With prototypes already testing public roads and production accelerating, the Cybercab edges closer to redefining transportation. And listen to this, it's absolutely amazing. Ron Barron, founder and CEO of Barron Capital, has once again demonstrated his unwavering faith in Elon Musk's ventures. Just after SpaceX record-breaking IPO, Barron announced he purchased another $1 billion in SpaceX shares. This move pushes Barron Capital's total holding of the company to a staggering $25 billion in market value, underscoring one of the most successful private-to-public investment stories in recent history. Barron's relationship with SpaceX dated back to 2017, when his firm began investing approximately $1.75 to $2 billion through secondary markets and employee tender offers at valuations around 20 to 22 billion. Now, by the time of the IPO, which valued SpaceX at over $2 trillion, with shares closing near $161, those early stakes had generated more than $13 billion in unrealized gains. Post-IPO, Barron's position ballooned even further, reflecting the company's metric rise driven by reusable rockets, Starlink global satellite internet constellation, Starshield's defense applications, and ambitious plans for orbital infrastructure, emphasizing that SpaceX's achievement in rocketry and satellite technology are not possible for anyone else to accomplish. He envisions the company at a cornerstone of humanity's multi-planetary future, potentially reaching valuations of $10 to $30 trillion within the next 10 to 15 years. Barron has repeatedly affirmed he has no plans to sell, viewing SpaceX as a lifetime investment alongside Tesla. In a wide-ranging appearance on CNBC, investor Ron Barron, founder, CEO, and portfolio manager of Barron Capital, reaffirmed his deep conviction in Elon Musk's two flagship companies. With assets under management approaching $55 to $56 billion, Barron detailed his firm's sustained holdings, painted an exceptionally optimistic picture for both Tesla and SpaceX, framing them as generational opportunities that will reshape industries and deliver extraordinary long-term returns. Barron Capital's position in SpaceX has grown dramatically since the firm began investing around 2017. Tesla ranks second, valued at approximately $5 billion in the portfolio. Together with stakes in XAI and related Musk-led ventures, these investments account for roughly one-third of Barron Capital's $60 billion in lifetime profits since 1992. Barron emphasized that the growth stems from Musk's singular ability to execute ambitious visions, from reusable rockets to global satellite internet and beyond. Barron described the company's trajectory in sweeping terms. This is going to be the largest company. On Tesla, Barron was equally enthusiastic. I hope you enjoyed this video, and if you would like to see more about Tesla, Elon Musk, and SpaceX, you could watch this next. Also, don't forget to tune in next time with more updates. Thank you so much for being here, and goodbye.